The anti-crypto army is looking to make a comeback as a day after Gary Gensler makes his appearance, a Democrat attorney general in Oregon is suing Coinbase using the same lawsuit format that Gary Gensler used against Coinbase. This is very strange. And there's a new XRP ETF that is being launched in Asia that's going to be big for institutional investors. I'll give you all the details. Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, we have some very interesting news. So Paul Grewal, Chief Legal Officer at Coinbase, tweeted out Today, the Oregon Attorney General is resurrecting the dead by bringing on a copycat case of the SEC's enforcement action against Coinbase. As a reminder, the SEC dismissed that case with prejudice. This type of political jockeying is an embarrassing waste of Oregon taxpayer dollars. In case you think I'm jumping to conclusions, the Attorney General's office made it clear to us that they are literally picking up where the Gary Gensler SEC left off. Now, folks, I don't believe in coincidences. What did we just see yesterday? Gary Gensler on a random Thursday appeared on CNBC, all of a sudden talking about, all these other coins are crap and only Bitcoin is legit, right? He almost became a Bitcoin maxi. Now, all of a sudden, you have a case being launched in Oregon by a Democrat attorney general. Gary Gensler is Democrat. They're all aligned with Elizabeth Warren. You guys know all of this, right? So a couple things here. This is the anti-crypto army trying to strike back. The Empire Strikes Back, right? This is like a Star Wars saga here. And then two, they may be using this as some sort of political move, chess move against Donald Trump because he's so heavily invested in crypto. So is his family. His sons are getting involved in different things. So that's what it looks like here. Now, I don't believe they have any type of chance here. The most they're going to try to do is hurt these companies by having them to pay legal fees again. But we do have to watch this very closely. It's very strange that this is happening, but I think this may be the last ditch effort by Elizabeth Warren and Gary Gensler and some of these Democrats. And we know there are pro-crypto Democrats out there. So I don't want this to seem like it's all Democrats because it's obviously not. But it's the Elizabeth Warren cronies that are up to no good. And once again, Gary Gensler randomly coming out of MIT after being kicked out of the SEC, just randomly coming out and starting talking about crypto. That was strange in itself. And now it's starting to make sense. Now, Eleanor Terrett gave some additional information here saying Oregon Attorney General Dan Rayfield, a Democrat, has apparently informed Coinbase he plans to pick up where the SEC left off and pursue the exchange over charges of operating an unregistered securities exchange and broker-dealer. The state is also resurrecting the SEC's original claim that Coinbase's staking program involves the unregistered offer and sale of securities. So this is scumbag activity. When the SEC itself dropped all these things, they're trying to resurrect this. It's clearly some sort of backroom meeting by the dumpster fire, right? Guys, Gary Gensler, Elizabeth Warren, and some of these Democrats. So we have to watch it closely because you never know what they have up their sleeve. Although I don't think this is going to go anywhere. This is clearly bullshit. It's going to get thrown out as the SEC itself has thrown out these things. But got to be careful here. Here, James Murphy, Metalaw Man, said the Attorney General of Oregon, Dan Rayfield, is trying to make it illegal for Oregon residents to trade crypto. Rayfield was sworn in as Attorney General 3 months ago. Apparently, he didn't get the memo that the anti-crypto army had been defeated. Perhaps the good citizens of Oregon should give him a polite call to let him know that this is a serious error in judgment. Attorney James Murphy, this was not in mistake, my friend. This is a coordinated effort, and I think we're going to start to see more and more of it. Don't be surprised if other states start doing this, and you will see it mostly from Democrat folks because a lot of them are in alignment with Elizabeth Warren, and it's the incumbents that are pulling the strings here, pulling Elizabeth Warren strings and some of these guys, right, who are getting disrupted. They don't like this crypto stuff, right? It's taking money out of their pockets. That's why you have Jamie Dimon for years just bashing crypto. He knows what's happening. It's taking in money from his investment funds, You can move money without going through JP Morgan. You can get a higher yield with staking and stablecoin interest and so forth. You can move money with stablecoins and settle instantly. He doesn't like that. So this is what the whole battle has been about, and why under the Biden administration, Elizabeth Warren and Gary Gensler were running amok. But they have lost, and this is all nonsense. Cody Carbone, who is the CEO of the Digital Chamber, said the Oregon's AG copycat case is political theater, reviving a dead SEC lawsuit. It's a waste of taxpayer dollars and a threat to regulatory clarity. The whole industry should stand with Coinbase here. Now, the good thing is Congress, with bipartisan support, Democrats and Republicans, are working on market structure and stablecoin legislation. And we know Trump wants that on his desk before the August recess. So things are moving forward, guys. We're going to get the clarity, and all this nonsense will be put to bed. But we still have to be cautious here, because you never know what they have up their sleeve and what they might try to do, even if it's like simply causing these companies to have to put forth legal fees, right, to hurt them in that way. That could be part of it. All right, folks, moving ahead, we have some very big news around XRP. HashKey Capital to debut Asian XRP Tracker Fund with Ripple as anchor investor. The fund aims to simplify institutional access to XRP for cross-border payments, crypto investing in Asia. Folks, this is huge. I mean, you are seeing on and off ramps being built globally for different crypto assets. And it's huge for XRP because it was held back over the Biden administration with the lawsuit, as you all know, for over 4 years, right? But now with the clarity out there and Ripple essentially getting the lion's share of the victory, the SEC and Ripple wrapping things up, many institutional investors are going to be confident now to build these type of financial products for XRP, and you're going to see a lot of capital flow into XRP. So this is just huge news, and it's a very different take on a normal ETF. So I'll give you guys the details here. So the new fund, called the HashKey XRP Tracker Fund, will be open to professional investors and will allow exposure to XRP without the need to manage the asset directly. It will offer the ability to buy through cash and in-kind subscriptions and offers monthly liquidity. Very interesting here, guys. Ripple will be an early backer of the fund. The investment deepens its strategic ties with HashKey, which already has Hong Kong listed spot ETFs for Bitcoin and Ether. So big chess move here by Ripple, positioning XRP to get capital from these big markets, especially like Hong Kong. And as I've said before on record, and I wrote it in my newsletter, I believe China is using Hong Kong as the testing ground. And we know Hong Kong is under the control of China. And eventually, China is going to open up the ETF investing for Bitcoin and Ethereum to their citizens in the mainland. The reason being, the ETFs allow them to control the capital. The problem they've had historically is people try to move the capital out of the country. That's a big problem they've had. And when they buy Bitcoin and ETH directly on exchanges and buy spot, they're easily able to move it out of the country. But if it's in an ETF wrapper, it stays in the country, guys, and they can track it 24/7. So that's why the ETF wrapper will be very appealing, and I think will allow them to open this up. Now, I'm not here to say if that's right or wrong. I believe people should be able to buy the asset directly, but I'm just talking about the setup in China, if you guys understand what I'm saying here. So huge move. This is going to bring in more capital into XRP as it has for Bitcoin and ETH. And look, these companies are going to go down the list. They're going to build altcoin ETFs for these different products. And I think it absolutely makes sense. The market wants these things and there's growing demand. Now, Ripple, as you guys know, recently acquired Hidden Road for $1.25 billion. Huge acquisition. Hidden Road just secured a FINRA broker-dealer license, so expanding its fixed income capabilities. This is massive for Ripple. There's going to be people who are going to hate and they're going to leave negative comments, but I'm just sharing the facts with you guys, right? I haven't made up anything here. I'm not giving you my hopes and dreams here. I'm telling you what the hell is actually happening. So watch out for the floodsters because, crypto, there are people who are tribal. I'm diversified. I hold Bitcoin. I hold XRP. I hold Ethereum and others. And I just call it like I see it. This is a huge move by Ripple and incredible stuff. I think it's going to set them up for a lot of cool things where the XRP ledger can be used, and their stablecoin RLUSD as well. Now, guys, quick word from our sponsor, and that is Trezor. Trezor is the maker of incredibly beautiful and easy and safe to use hardware wallets. So I'm a user of the product. I specifically use the Trezor Safe 5. And guys, they were the first to create hardware wallets. They were the pioneers. They started this in 2013. They're the ones that created the seed phrase and all of that, guys. And they have great products and top of the line security. So incredible pedigree that this company has, and their devices are beautiful. You can check out the designs and the different versions they have. Like I said, I'm a user of the Trezor Safe 5, and they also offer a great service where you can talk to a Trezor expert to help you get your Trezor device up and running. So they do some hand holding here, and their devices, guys, is open source. So that's what makes it really unique from other hardware wallets out there. And they support multiple systems and a lot of coins. I'm talking all your top coins, your Bitcoins, your XRPs, your Ethereum, everything on the, that you guys may want or need. And they also support like new institutional tokens like BlackRock's BIDL token. So, which is incredible. They support a variety of stuff. So you can see it here on the screen. They have a great software called Trezor Suite where it helps you to easily manage all your tokens. So once again, I'm a user of the product. So if you'd like to learn more, guys, check out the link in the description. Now, folks, we got some news here. Canary Capital seeks SEC approval for staked TRX ETF. So TRX is the native token of the Tron blockchain. Canary Capital has been filing for a lot of altcoin ETFs. And like I said, there's appetite for this, and they're throwing as much into the ring here to see what is going to get approved. And I do believe the SEC is going to go down the list and approve these. Some of them they may not, it just depending on, the history of the blockchain, what's happening with the company, and are they doing things the right way. So Canary Capital is looking to launch a number of crypto ETFs, including ones tied to Pengu, Sui, Hedera, that's HBAR, and Litecoin. So they're adding Tron to the list here. So you're going to see competition heat up for all these altcoin ETFs. And this is a very good sign because the applications will pile up at the door of the SEC, and they're going to see the market wants these products. And as I've stated before, I believe the index ETFs are going to be the big winners in the long term, like people who currently invest in the NASDAQ Top 100, the S&P 500. People are not going to necessarily say, oh, I want Tron over Solana, because the majority of folks out there, they don't know the difference, right? And they may understand Bitcoin and maybe Ethereum and XRP, but as you go down the list, you can't expect the average Joe and Jane to know these things. But they can say, okay, I want the ETF that has the top 10 or the top 15 or top 20, or ETF that has the proof of stake blockchains where I can earn yield and things like that. That's how they're going to invest. So I think, as these individual ETFs get approved, they're going to be thrown into index funds. And I think that's going to be the big winner, in my opinion. Now, moving ahead, Ivan Soto Wright, who is the CEO of MoonPay, he said stablecoin rules shouldn't play favorites. I've just sent a letter to Congress backing the Conference of State Bank Supervisors' push to keep state-regulated issuers in the game. The Genius and Stable Acts should support fair competition, consumer protection, and innovation. So I love this because we need the industry to weigh in on these new bills. Obviously, the Genius Act is in the Senate. That was issued by Senator Haggerty. The Stable Act in the House. That was pushed forward by French Hill and Brian Style. But we need the industry to weigh in and push back on things that don't make sense. Now, I don't believe the folks in Congress are trying to do anything nefarious or bad, but they only know so much, right? We're the experts in the industry. So we need to weigh in here, and we need to make sure there's no monopolies being set up and it's fair competition and all that, and that Congress has the verbiage correct that has a balance, right? It protects consumers, but it also allows innovation, and there's not roadblocks being set up for entrepreneurs and people to build. So this is really great. I'm not going to read through his whole letter, of course, but I just want to let you guys know that this is happening because it's important. These bills could be signed into law this year. Well, I shouldn't say these bills, but meaning the two stablecoin bills, they're going to be merged into one, obviously, but the crypto market structure and the stablecoin bill will be signed into law respectively. So this is really great to see. Now, Amanda Tuminelli of the DeFi Education Fund, I've had her on the podcast a few times. She says, we at the DeFi Education Fund wrote 5 guiding principles for the SEC Crypto Task Force to consider as they implement a token safe harbor for projects intending to decentralize, which include proposed eligibility and exit criteria. She says, our 5 principles for the token safe harbor, which are described in detail in our letter, are 1, technology agnostic approach, 2, broad eligibility criteria for projects intending to decentralize, 3, well-calibrated disclosure and compliance considerations, 4, clearly defined exit criteria, and 5, appropriate treatment of secondary market activity. Again, great. I love this. The industry weighing in. I'm going to try to get her back on the podcast to talk about this because I think this is very important. This right here is key, the token safe harbor, because it applies to the entire market. You have a blockchain project, you have a token, you can go into that sandbox that the SEC has created without having to worry about getting a lawsuit or some sort of enforcement action. And you can start building and get feedback from the SEC, and they can get you to or put you on a path to get fully decentralized and all of these things. This is critical right here. This is the foundational element that's going to be important for the crypto market structure, guys, because we know the big question, the big overarching theme is security versus not security, right? And that's what Gary Gensler was using over the past 4 years to attack the crypto industry. So once again, I'll try to get Amanda on here. I think this is really great to talk about this. All right, final news item. Another Japanese company is adding Bitcoin to its balance sheet. Japanese retailer ANAP, A-N-A-P, if I'm saying that right, has added $70 million in Bitcoin to its treasury, joining the global wave of companies adopting Bitcoin as a reserve asset. Many of you know Metaplanet has been on a tear buying Bitcoin. They're following the Michael Saylor strategy playbook where they're raising debt and then, buying Bitcoin with that money, of course. I'm not a big fan of the amount of leverage. If they did a little bit, it's okay. But another Japanese company doing this, and here in the United States, we just about a couple of weeks ago, GameStop said they're going to do the same thing. So guys, Bitcoin is going to be a reserve asset. It's digital gold. It's why I hold in my portfolio. It's why there's going to be some Bitcoin I'm never selling. I'm keeping it. It's going to go to my daughter. I believe it's here to stay, and we are seeing adoption, and that's the important thing. We're seeing the United States, looking to set up its own Bitcoin reserve and much more. So things are moving in the right direction, guys. I know right now the market doesn't reflect all the bullish news and things that we see, but it will eventually. You guys know how this works. It's in cycles. Yes, we had a monkey wrench thrown in the system with tariffs and the tariff war, right? No one saw that happening immediately, especially as we were in a correction, and all markets are currently affected. Stock market, everything, right? It's not like it's exclusive to crypto, but as always, we'll get through it. Markets will bottom and then they'll rip again. I believe that we're going to see some upward movement soon because the markets are going to start to price in the tariff craziness that's been going on. If they haven't already, global liquidity is rising, the dollar is collapsing, and I continue to see Bitcoin whales accumulating. So wallets of 10 or more Bitcoin continue to accumulate despite the drop we saw in late February into March, where the whales slowed down significantly. I think some of them may have panicked, right, because of the tariff stuff. I don't blame them, but they started picking up their buying again. Very good sign. So, guys, when in doubt, zoom out, be patient. Remember, emotional control and patience is so critical when it comes to investing. You got to have that macro view, because if you're investing with your emotions, man, you're going to get wrecked. It's going to be a nightmare for you. But if you just look at the data and if you have the long-term view, it will work out well for you guys. I mean, even if you just look at people who have invested in stocks and just left it, how well they've made out. I mean, just look at Warren Buffett, right? But of course, Bitcoin and crypto, as Paul Tudor Jones said, it's the fastest horse in the race. nothing gives you returns like this. So this is why we're here. We're focused on this versus stocks, real estate, and precious metals, right? I think you guys get it by now. Anyway, guys, let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Guys, a great way you can support me in the podcast is by subscribing to my free email newsletter. It's 100% free. It's on Substack. Link will be in the description. Also, check out my book on Amazon. It's available in paperback and digital. And my new course at mycryptocourse.com. Expand your knowledge about crypto. This is a comprehensive course that covers every aspect of crypto, includes videos, write-ups, downloadable materials. What makes it unique, you will hear directly from institutional investors, founders, CEOs. So it has expert commentary. No other course offers this. So if you'd like to learn more, go to mycryptocourse.com. Guys, thank you so much for watching and listening. I appreciate you all, and I'll talk to you all later.